Hey, good afternoon. I'm just opening up a few minutes early. We got 5 minutes until the release of the expected. Just remember, expect whipsaws. All right, let me get closed captioning enabled. All right, closed captioning is running. And I have a side-by-side panel that basically just kind of shows on a 1 hour time frame. We can go any time frame, obviously, but I just want to get a sense for the moves, the whipsaws in the dollar, gold, oil. Here's your 10-year and SPX with volatility. Prior to this, if you had a chance, Craig did an excellent write-up that I recommend. I just actually tweeted this as well. So if you're on my Twitter channel, you will see. There you go. Okay, great write-up by our resident macro advisor, Craig Shapiro at LaDucTrading, just in time for FOMC regarding, to step down or not to step down. I have some opinions about that as well, but I'm going to kind of live commentate the news. We'll get the minutes of the meeting, obviously, and then we'll go from there as it relates to the market reaction, and then Powell at the podium at 2:30. Last time FOMC, we had a bunch of whipsaws, right? We rallied into, then had a quick, sharp pullback, pull down, and then we had another rally as Powell took the stage, and then we had a sharp reversal, and it was quite large, and it continued for a few weeks. So we'll see what we get today. Timely, the White House is coming out seconds before the FOMC statement. Oh, I'm not skeptical. Fed is independent. Biden believes it has best monetary policies to address inflation. So just happened to be coincidentally coming up at the same moment. There was also a broadcast, if you had time, to check out forward guidance. When will the Fed slow down? And just emphasis, I shared this with clients this morning. It is with the Fed whisperer himself from a Wall Street Journal and Joseph Wang, the Fed guy. So that is definitely also on my Twitter feed if you are interested in that, especially during the break that we have from basically 2 to 2:30. All right, we got 2 minutes to go, and it's cracking me up that Biden is, the White House is putting out that policy statement. This is just a quick review of what happened early this morning. I've been talking about this pushback in SPX, likely down to 3,800, not all in one straight line, but so far it has been working. We basically got rejected at 3,900. 38.38 was my price target for now because we're on support on a daily. And for those who don't know, I kind of always look at the bigger picture, week, day, and hour time frame. I have a measured move here. So far, it's been working really, really well with fib. We'll see what happens at this 38.51 area. I had just posted there is a large amount, dark pool level, 2 billion in notional value just came in at 384.59 in SPY. Again, 384.59, 2 billion. So again, whipsaw for me is just, I want to see how the market's going to react across multiple asset classes, obviously dollar, oil, gold, yen. We got Federal Reserve hiking rates by 75 basis points. Let's see what we get right now for a little bit of movement. As expected, by the way, there's nothing surprising there. The path has been pretty clear that they wanted 75 basis points. There was an outside chance, an outlier chance they'd move to 100, some down to 50, but really as expected. All right, comparison statement. basically we have, in order to attain a stance on monetary policy that is sufficiently restrictive to return inflation to 2% over time. So they really haven't made a change. In determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy. All right, so this is basically what happened earlier this week. We had a massive easing of monetary conditions, and they're basically saying more of the same. And we've got a big, nice push here. Remember, I just said 2 billion came in at that 285 level. We'll see if it can actually stay that way. We believe the ongoing interest rate increases will be necessary to achieve a sufficiently restrictive policy stance that will eventually return inflation to 2%. So again, just happened to be coincidental, I'm sure, but 2 billion in notional value came in at that 384.59 price point. VIX is falling. We'll go through that real quick. 25.20 is my support. So personally, I think that we're going to get a little support here at 25.20. If not, then it's very market bullish. Okay, below 25.20, but I think we might hit our heads and then reverse. They're definitely bringing the dollar yen down here. Fed says it will take cumulative tightening, lags into account. That's a bit of a new wording. The dollar is dumping. Let me just kind of show you this again. We had a big drop in the dollar, spike in gold. By the way, that's always, it's fascinating. But as I've mentioned with clients repeatedly, gold for FOMC day only is almost always long, and then it reverts. But for right now, gold has spiked up. Dollar has obviously crashed lower with volatility. I still think 25.20 will be nice support, and SPX is spiking higher. We'll see if it gets sold. Again, this is what typically happens with FOMC. We have these large movements and then reversion. Go to the 10-year and TLT and all that. Back on the 21st, we had a very large Bank of Japan intervention Friday morning, and this is still intonating weakness. FXY, which is just the ETF for the yen, continues higher. That was a long call for clients. Bonds stopped going down. That's also been doing okay. They even have a comment here. War in Ukraine is putting additional upward pressure on inflation, weighing on global economic activity. We now have rates at the highest since 2008. And hints at a change in policy ahead. We basically have just spiked into some resistance levels. Fed hints at possible slower pace of rate increases. A little softer, and obviously, anyway, gold is popping up on the lower dollar. The worry, however, is as this drops down, crude pushes higher, and obviously that's very bullish above 93 in West Texas Intermediary. So in crude, we got 75 in dovish is basically the baseline bet, and yields are coming down with a dollar. So that's risk on for now. Possible smaller increases ahead. So policy was approved by unanimous vote. We know about the 75 basis point continued fight against worst inflation in 40 years. Signaled future increases in borrowing costs could be made in smaller steps to account for cumulative tightening of monetary policy enacted so far, excuse me. Sorry, let me see this. The highest that's been raised. Right to control. Okay, nothing new there. So we had a sharp turnaround. Basically, we've already pulled back down. We tagged a 618 fib level on an intraday short anyway, so it made it to 38.26 area before sharply reversing higher. Let's see how it does back at this 3900. It is risk on for markets if this gets and stays above 39.31. Otherwise, we still have some time to wait regarding Powell and what might come out of his mouth. Could put a boot in there. Widely expected. Markets are rallying. Perceived dovish so far. Let's see if he gets up to the podium and says anything hawkish like at Jackson Hole. Basically, we have a big kind of range here from 3950 to 3800. I know it's 150 points. It's kind of wide, but that's basically it. Above 3950, CTAs start to get a little bit busier with their buying. Below 3800, obviously, all bets are off. Thing to keep in mind, though, with this FOMC day, at least in my experience, is that the first move is typically reversed. So maybe not, but for right now, yeah. So right now we really have Nick Timmeros from the Wall Street Journal, otherwise dubbed the Fed Whisperer, coming out saying new sentence in the FOMC statement signals more increases, but hints at possibly smaller increments. Hints, suggests, rumor of. So we definitely have gotten the whole kind of midterm election run up. That'll be more market moving potentially. We have basically the pivot of the pivot of the pivot of the pivot. It's just all round and round. But for right now, that's being perceived anyway as short-term bullish by markets. We'll see if it can actually stick. All right, let's go over just a few of these short duration yields as well. So here's the 3-month, right? This is the 3-month yield index, and it is really approaching that 4-point. It already hit 4.05. And on my price target is kind of like 4.16, 4.16. So the short end has been really, really strong. Short term, we have a pullback in yields, but the bigger issue is it's still in trend. Differences on a side, on this 4.1, really above is very bullish to 4.7. Otherwise, it's going to continue. They're going to continue to try and suppress yields. And I think this is helping for sure. The dollar yen moving lower. All right. The dollar moving lower is helping gold. Gold was a recommended chase. Silver as well. They just typically run on Fed day and then they reverse. Fed swaps downgrade the likelihood of a 75 basis point rate hike in December. All right, so right now we're just right back where we were on Tuesday morning, excuse me. The interpretation so far is like a wait and see. So the very fact, oh yeah, bonds are definitely the ones to watch, but I think more importantly, this Powell testimony is pretty key. Oh, by the way, if you're looking for me after I we'll have some time to chat a little bit more, but the point is I want to see what the futures traders see. And right now they see a 98.4 chance Fed will be raising rates by 75 basis points at the December meeting. So All right, so they have done the deed, hints at possible slower pace of future rate increases. So just kind of keep that in perspective. This is a hint, this is a rumor, this is a suggestion. Really, that's the market's just running on that, or algos. So not much of a bounce if it can't follow through. Apple is another one waiting for this to kind of determine if it's going to get and stay below this 148 area. So it's popped up, pretty much hit its head on 151.81. Doesn't sound like a pivot to me. Doesn't sound even, it's throwing some crumbs. How else do I put it? All right, let's go to okay, oil's firm anyway from API release last night was bullish oil. The EIA was bullish this morning. I'm just going over these. We're gonna come back down. Only true break is 38.38 for a solid push or press short. Everyone knows first move is the wrong move, doesn't mean it won't stick. So I really want to wait until Powell gets up there, and we'll see if there's any hawkish bent in his words. Sorry, meant to have that on here. All right, the 2-year yield is down 7 basis points at 4.47. Again, yields are still in an uptrend. Dollar is still in an uptrend. We're having a fast and furious pullback, which is risk on for equity markets, but that can be just as quickly reversed. For right now, though, the new sentence in the FOMC statement signaling more increases, but hints at possibly smaller increments. All right, so this is basically following the first reaction. A little bit different from the last FOMC. Last FOMC, we ran up and then immediately down on the print, and then we ran up to Powell and then immediately down after Powell. Now we've got a little reversion. We ran down into FOMC and we've popped. Terminal rate is coming down. Basically, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity. A lot of people are not liking the implied futures at 98.4%, saying the Fed will raise 75 basis points. So they've basically priced in the effective funds rate around 5% in May of 2023. It was June. Hold it forward a month. So let's see if this restrictive kind of terminology is going to give the bulls some more power or follow through. So far, just even on this little side by side, you can kind of see how we've been getting rejected recently. We need to take out the prior high of that 39.30. I don't think this is going to help the let's see what we got here. Yield curve. Okay, you got a bunch of commentary out there that the front loading is essentially over and rate hikes from here will be more, in keeping with higher cost of capital. We'll see. That also. Bulls are definitely excited about that interpretation. Basically, that the slowdown in the pace of future hikes, I'm not so sure. I don't see any way right now that this is a pivot, but pandering right before midterms. Yeah, and here's why. Why I think it's still a sell is because that Fed funds futures is absolutely still 5%, and it's pulled forward a month. All right, crude isn't at 93 yet. Gold has popped right back up to that kind of 144, 145 quarterly resistance. Dollar's just down where it was, yesterday. VIX, by the way, 25.20 is still my kind of support area. It didn't even tag that yet. And we're already starting to fade in this move. So we need a lot of follow through. But for right now, let's see. Yeah, any higher oil above 93 crude, and we'll be hearing from them. So skew is still on the ground. VVIX still extremely oversold. Let's go take a look at some currencies while we're waiting. All right, so what do we have? As expected, a quick sharp stick of the eye here for the euro dollar carry trade, but big picture, still waiting for this to weaken. And once this gives sway, we've got a lot lower levels. So far, it has just bounced up beautifully right into resistance and come right back down. So could be a few more weeks. We've got midterm elections that's kind of driving things for the most part. But I still see that as a protracted downtrend. Same thing with the pound. We just haven't broken down yet. The interesting one for me, this is really interesting for me on the currency front, hugely interesting for me. Okay, usually, first and foremost, this has been very strong trend up until this 151, right? So everyone knows it's been my price target. We have now softened on a weekly. Again, we're still strongly in trend. We have softened. This is basically, Bank of Japan intervention at its finest, but it's definitely rolling, right? So this is helping to keep our US yields suppressed. That's one way they're going to do it. But the problem is, once that happens, oil is inversely related, absolutely inverse related. So if that puppy's going to is dropping, oil's going to pop up, and that's where we're going to have big troubles. It's a little early yet. That's just a trade. I'm not ready for that swing yet in gold. TLT, not really feeling it, not yet anyway. All right, but what I was going to finish saying, and I got distracted, which happens a lot. Excuse this strange ghost print over here, but this is the dollar yuan, and it has been moving pretty well higher while the dollar yen has basically calmed down. So watching this very closely. Wait a minute, trade is now priced in 50 basis points. Well, I just saw 75. What's going on? Hold on. What's sufficiently restrictive? All right, so this was interesting. Talking about restrictive language. I think I shared this with clients, but let me just show you. Here, if I can show you. We had a tightening to a restrictive financial conditions index revert to accommodative, its largest swing in a 5-day period recently. So it went from very restrictive to very accommodative. It's these in this financial conditions indicator. So I'm wondering if this, when he says, what is when the statement's talking about sufficiently restrictive. I don't know if this is make or break, honestly, for the rest of the year. In other words, if Powell comes in and, you know, panders on this potential for the slower rate hikes than the lower rate hikes, I should say, then yeah, market's going to love that. So anyway, the 2 billion notional value that came in exactly at that 385, they made their money. And obviously there's lots of debate. Has the Fed gone soft on inflation? Well, we'll see it. We'll see it in oil pretty quickly. Let me just go see something. So this is what I wrote yesterday, obviously. Where the heck is it? All eyes on the Fed. What has changed, right? I mean, except for some central banks elsewhere slowing down or pivoting their hikes or QT. Wages are definitely strong, as we saw. JOLTS openings are stronger. ADP wage increases, especially in hospitality, leisure, are 11% and overall 7.7% year over year. So that's the enemy of bonds, as I wrote about really a while ago. But this is all about higher wages and that increase inflation being extremely sticky. This is October of 21, but the point is very, very much a productivity gap would be, wages would be catching up. And NASDAQ underperformance, that was part of my theme for this year, but also the very fact that wage increases and demand would increase. And that was basically the enemy of bonds. So this is definitely played out. And this is the 30-year. We are now down here at 120, right? So that was my bet. They already smelled it and they started selling off, and wages, higher wages are a lagging indicator. So they have continued to increase, is my point. So bonds are still at risk. This still hasn't stabilized. All right, so kind of sticking around here until Powell comes out. So it's interesting on the SPX. Let me just show you that. What was the low so far? So we already talked about this from yesterday, but we came back in. It's like literally all of these levels, and this is a fib. We came all the way down to a 50%, and then we tagged briefly this break, 1 o'clock, this 61.8 fib level on an intraday, which was my price target of 38.26. So we already had a really decent short. Now this is to be determined. Let me just get rid of this because it's kind of annoying. Funky chart, not really so easy, but I'll tell you what was the absolute tell so far. This. I still think that's really, really, really important. So we have the dollar is not falling apart on a trend basis, but it's actually, but it is weak. That's definitely the tell for me. And then the short duration, as I mentioned, that has just been marching higher, higher, higher. The 30-year, that happens to be the 3-month, by the way. The 30 years taking a little pause, but it's still firmly in trend. I'll only come back to the 21-day. And look how it's kind of popping up right now. Anyway, I know the 2 years the most, but I like the 10. And I'm not seeing anything really, really conclusive yet. Yeah, nothing changed, big picture as it relates to the terminal rate still 4.75 or 5 for a year, nothing changed. And a lot, one way that this could definitely be interpreted, I agree, but it's not. You can see because of price action. So many that we're expecting them to pause, pivot, or step down into December. So we don't have that yet. In other words, this whole premise of the run up, besides seasonality, Santa, midterms, and suppressed VIX, suppressed oil until recently, was this whole concept that they were going to step back on rate hikes to 25 basis points from 50. So now they're considering the pace of hikes. So anyway, let's see what we get with Biden. And let me just see if you have any questions or comments. So yeah, again, I'm in Zoom Q&A. Forgive me. So housekeeping, it happened a little fast. I'm trying to chase along with you as well. I'm in Zoom Q&A. That's what I can actually see. All right, traders just pair back bets on December rate hike, and they see the Fed swaps now price in 50 basis points. So we'll see if that continues. Yeah, so we really can't do anything until Powell's done speaking. I mean, as far as swing traders, you're chasing to your heart's content. That's fine. But I'm talking about until he's done, we really get the actual moves, my experience. We still have 7% 30-year mortgage. All right, and let's just see. So I'm in Zoom Q&A, and then let's see, Michael. I don't even know if Rithika and Archana are in Zoom chat. They're my live trading room moderators. So I do this for clients every Fed day, and but normally I run a live trading room in the morning every 9 to 11. We chase, swing, and trend trade. So I go over every asset class, and depending on the time frame. Right now, I'm just kind of watching the news to see if there's anything else in here. Yeah, that's one way. Nothing pivotal. I love how you put that, El Professor. Nothing pivotal in the fact that the Fed can't raise 75 basis points every time. Well, they did a good job running with the run up into. I mean, this has been their trajectory so far. SPY's getting busy. I mean, getting is more firm. So March, 25 basis points, May 50, June 75, July 75, September 75, November 75. So as expected. Yeah, I have a lot of alerts going on, so I'll be back. I mean, I'm right here. Let's see what we got. It's 2:30. Powell should speak soon. Still looks pretty bullish, even if there isn't anything noteworthy of substance. PLT is just hanging out there, right? So this is a strong monthly support. It bounced. It's just hanging out on the daily. See if we get any news. Okay, Powell's beginning the press conference. I'm just looking around to see if anything stabilizes here. I think that was absolutely the tell here. They're really trying to push that down. It's still in trend, but that is gonna keep that lower and give that a fighting chance. Apple's not having much of a reaction yet. Yeah, NASDAQ underperformance for sure. Hey, Alan, good morning. Good afternoon. By end of, this is the tell. This is the only thing that really, really has me, okay, how do I put this? Slower does not mean lower. Absolutely not. The direction has not changed. They've pulled forward, by a month. Okay, Fed's Powell speaking right now. Without price stability, there will be no sustained, strong labor market. What the hell does that mean? Okay, we will likely need restrictive stance of policy for some time. Sorry, let me put it back on SPX. Which helps more, this, or that, where we're kind of watching on an hour chart, dollar dump, gold spike. So far, gold as a chase is actually doing extremely well. I still have shorts in Apple and Netflix and SPY and the rest, but let's see how XLE is doing real quick, and then I'll go back to that just for clients, and then I'll go see what he's saying. A little supported, very, very bid. Yeah, he's going to be in trouble actually. All right. Fed Powell, the US economy has slowed significantly since last year. And while he's speaking, by the way, crude continues to move higher. It's actually at 90 even right now. Fed Powell also says we will most likely require a restrictive policy stance for some time. Again, slower does not mean lower. We have an extremely tight labor market. Job openings remain plentiful. Slower output growth is also putting pressure on business fixed investments. You might be listening to it live. I'm just getting the high points. Powell moving stance purposefully to sufficiently restrictive. I just love how they do that. Inflation still well above our goal. Labor market remains extremely constrained. Recent inflation data has come in stronger than expected. Wage growth still elevated. Basically, labor market continues to be out of balance. That is not grounds for complacency. Demand far outnumbers supply. As he speaks, you can see what's kind of going on here. A little bit of a pause here in the spike up. But I think the yen is really telling. Really, really, really telling. Okay, gold's going off my chart here. Dollar's dumping more. We're still getting bid here. All right, so we have the resolve, strongly committed to bringing down inflation without price. Okay. Powell, longer run inflation expectations appear well anchored. That's definitely not dovish. I'll tell you right now, that does not sound dovish to me, but the market maybe doesn't. Ongoing increases. Sounds like a few. That just dumped. Seriously, that does not sound at all dovish. That one line that I just read. Longer run inflation expectations appear well anchored. Yeah. No. Then there's no dovish. There's no step down. There's no lower for longer. It's slower does not equal lower. I don't know how you want to put it. That is definitely. Oh, I know it. I'm not trading this craziness, but I will tell you, there is always, yeah, and now Powell comes right for the kisser. We will have some ways to go on rates. Boom. It's very, so I have to pull back in time. This is like way too spasmodic for me, but listen to this. Fed just said interest rates final value will be higher than currently expected. That's not dovish. There's no step down, there's no pause, there's no pivot. We still have some ways to go, quote unquote. All right, so that's pretty much it. We still have some ways to go. Ultimate rate level higher than previously expected. That's all there is to say about that. The end. Okay, so we have the truth. We've gone nowhere, right? So what goes up comes down. Let's see what happens when he leaves, goes away, and stops talking. But clearly, Powell's hedging his bets, right? So on one side of the mouth, he says, but we don't need inflation to come down to slow pace of increases. I'll repeat that again. But we don't need inflation to come down to slow the pace of increases. So not data dependent? Craig, where are you? Yeah, market's pretty thin. That is something. We don't need inflation to come down to slow pace of increases. Not data dependent, not even a little. Historical record strongly warns against premature loosening. More hawkish talk. That's just. All right. That's all I need to know. All right, so we'll still wait till he's done. Right now, just to let you know, volume is completely flat. So my indicator is showing, it's still bullish to neutral. Okay, what I need to see is a reversal of that. The dollar, whack-a-mole. Yen is definitely I should have up here on this chart. Anyway, gold has been the chase du jour. I mean, all of this. Crude is definitely percolating higher. If we get above 93, we're going to get some pain and suffering. We're right down to this 38.50, right? So this is going to be a chop zone for this whole candle. Let me kind of put that out of the way. And let's see what some of my alerts went off. Let me just go see. All right, that came back inside. That came back inside. We're just sitting on this 274. That's actually pretty bullish on volume. So we definitely have some volume that's bullish, I should say. Net, in other words, it's definitely net bullish. VIX still sitting on this, very kind of key weekly low. Powell's now talking bullish again. Just said, time to slow rate hikes may come as soon as next meeting. So really doesn't know. All right, so VIX, did it tag? No, it didn't tag my 2520. Huh. Yeah, CPI should be important. Algos are whipsawing the market, pretty typical. Does not think that the Fed has over tightened too fast. Basically, the Fed's going to pivot next meeting or the one after that. Exactly. And we will consider all other financial conditions as well. Again, it is a question. No questions on QT yet that I've seen. Question of how high or money supply, nothing. Zip zero. You asked about Tesla? Yeah, it needs to stay below 220. Yeah, this isn't really, we got to wait until Powell's done. Time to tell the pace of rate hikes could be as soon as the December or February meeting. We will have discussion on that at next meeting. No decision made yet. Powell also says we will be looking at real rates. So basically, they're doing their job. There is one job that they're getting done. It seems that they're pushing back against, market interpreting that there's going to be a slower pace of rate hikes that would also mean a lower terminal rate. Definitely not seeing that. Nothing's changed there. They're not pulling forward any quicker rate cut, a pivot to a rate cut that's sooner. All right. That's for me, the money quote, ultimate rate level higher than previously expected. That is absolutely the money quote for me. Likely we'll have discussion of smaller hike in December. Why? Because they saw the market turn south? Really, I have no idea. All I know is there's no commitment. Except that inflation, long-term inflation is entrenched. That's another money quote. So they're basically just saying speed is less important. The journey is less important than the destination. There's really nothing of concrete to his current talk. There's a lot of uncertainty, which is why we will consider policy lags and cumulative level. I mean, it's just, you know, we will consider. The data suggests we may eventually move to higher levels than we thought at the September meeting. Still talking maximum employment and price stability. But big picture, they want real interest rates to stay positive, and that is not friendly for tech. Am I right? That is definitely, I don't see anything yet that says, whoo-hoo, we're going to have a step down. I think we're going to have just as it says in December, then they're going to talk about it for February. Okay, where am I? Peggy, what makes no sense? I'm trying to live commentate this. It's honestly, it's not going to change my macro, my intermarket, my fundamental analysis one bit. So unless there was an absolute, you know, clear message that they were going to pause, step down, pivot, there's none. I just don't see anything. The euro dollar strip, which is kind of important for those very, very geeky macro folks. It's edging back to pricing highest Fed terminal rate for cycle near 5% next year after comments about ultimate level of Fed funds rate being higher than previously expected. I still think that's all we need to know. And the fact that the push is on for higher real rates, which is not tech friendly. And that longer term inflation is entrenched. That's it. So what's a go? What's a go? All right. I don't know. That's just a really good question. What does it mean? It means they're just going to keep hiking and tech continues to underperform. And if they don't keep hiking, then we're going to get an oil pop. The one thing that seems really clear to me right now anyway, if we're going to have any follow through on a move higher, then you want to be watching this puppy, because this will roll over and that will help put a pause in the dollar and yields, and the rally can get going again. There's nothing the Fed is doing right now that's, in my opinion, supportive. So we still have non-farm payrolls, you know, likely to be strong as we've seen the data out with wages and jolts and the rest, ADP. For the most part, midterm elections to me hold a lot more risk than this Powell presser. Right, that's me. Where's my thing again? That, right? Bye-bye. So what are we going to hit today? Well, clients know my price target from yesterday. So as soon as we got back inside 3,900, my baseline bet is we have a sharp move down to 3,800, and then I don't know. 3,800 is very important. So if we bounce there, I wouldn't be surprised. And we have a huge 150 point range, no joke. But if we get and close below 3,800, all bets are off. It's very bearish. So 3,800, I'm good. Apple short, SPY short. We had a little short duration gold chase. So far it's working. Netflix short. But I'm still listening to him. I should say I'm not listening to him. I'm actually reading his transcript, just so if you're curious, because I can't listen and talk at the same time. It's very hard, but I can read and watch a video and talk all at the same time. All right. If we over tighten can use our tools to respond. All right, so we're going to hit that 3,800. That's just really, really a gift. By the way, selling just dumped. It went from positive to negative 0.52 in a New York minute. Oh, and this just popped up like a daisy. That was a nice tell. So for those clients of mine, anyway, we'll just go over some quick volume. Bye-bye. Remember that line in the sand? That was absolutely, that's it. That's it. Oops, sorry. That's really obnoxious. All right, so here's the level. Next one, the fib level, 3814 that I gave. That's tagged. Now let's see if we get a little itty bitty, what do I call it? Bounce here in this area. But 3,800 is still baseline bet. VIX, let's go look at VIX. Nothing. VIX is still just nothing. Less than nothing. It's not ready yet. Ooh. You know the next level. I want this to come down and break, so it's not there yet. VIX is broken. It's not much of a tell anymore. Okay, this is also, we're done. The market's done. Listen to this. It's Powell. It's very premature to think about pausing. He's pulling Volcker at a Jackson Hole presser all at once. Okay. We are, oops, sorry, I don't mean to have it on cues. I do not. I wanted to do this. Okay, oil's kind of tame. SPY's not dumping. This is the level it really needs to dump, 379, right? You can see intraday support, you can see daily support, and you can see weekly. It's sitting on the 10-week. We got nothing until it breaks these levels, depending on your time frame. Housing market was extremely overheated previously. Ooh, wait a minute, I just missed something. 2-year yields have clawed it all the way back. All right, so here's where I really caution clients that I've already said 3,800 is support, and it's strong support. We could bounce here. We've fully retraced my price target, right, from yesterday. I mean, perfectly. Every single level intraday, even the bounce, even the gap down. This is crazy. But the point is, we've hit 3,800. We really need to break to continue. What was my call for this week? That this expansion candle would be completely retraced, unwound. And it has exactly been unwound. The low was 38.08. We just hit a low of 38.01. The drama comes in if we push through. So 38.08, sorry, 02 is a bounce area. And if we get and stay below 37.96, then this little inverse head and shoulder is busted, right? The only way we're going to stay in this bullish bent is if we can stay above 37.96, end of point. We stay above, we have a fighting chance. And remember, I'm a big bear, but this is a counter trend rally, so I could talk about that. If we stay above, we can make it back up to this kind of 41.30, which is measured move. Otherwise, no. Okay, keep it simple. No comments I've seen, Peggy, on midterms. Hold on, let me go. Let me go back to this little side by side. Dollar is completely recovered. Gold, as a result, has come back down. You got to be faster. Be fast or die on these very quick chases. I don't know what it is, but gold always pops on FOMC. Like, there's got to be a back testing on this. I always see it pop on FOMC. Then it comes right back down as discussed. All right, so volatility is still dead. So this is really, really, really broken, but I put it here for giggles. I should put US dollar yen. I think that's probably better. Anyway, we're right back down to 3,800 now. Chop fest. Ugh. Okay, Biden delivers remarks on infrastructure, unions, inflations, and semiconductors. That's a pass. Hold on, what's it say? Overheated labor market. Why would he pivot, pause, step down, or otherwise have anything dovish to say if his comments are the broader picture remains an overheated labor market? Crazy. Okay, we continue to look for signs of gradual labor market signs. Okay, well, that's him, not me, but nothing stands out. It's just nothing. There's nothing dovish there. ECI reading was also a mixed bag. That's economic indicators, I think he's talking about. I don't see the case for real softening in the labor market yet. Nope, they won't either. And they have an effect on inflation. I wrote about that a year ago. This is the reason for the season and why bonds collapsed. All right, I'm just looking through. See, he's still talking. But like I said, markets are already bouncing at that 3,800. Absolutely a key area. Powell is still hoping for a soft landing, literally, but it's not obvious yet. Literal words. We keep looking for a softening, but it's not obvious yet in labor markets. It's 3? It's 3. All right, I don't know if this is helpful at all. I'm already short Apple. This is just an earnings play, fake breakout, fast failure, and nothing has changed in the Fed comments today or the Powell presser. Okay, so 2 key hawkish comments from Powell presser so far. Rates will need to get to higher than September dot plot forecasted, and it is very premature to be thinking about pausing. Yeah, and both basically contributed to stocks and bonds selling off after he spoke. Yeah, we have a lot of earnings after hours. Again, technology play, Qualcomm, but just careful, semiconductors and the like are still meat on the bone short, and then everything else doesn't really have such a big impact for me. So we're gonna have a Christmas hike. Talking about the stronger dollar is a problem for some countries, but we have a strong economy over here, so really doesn't care. Like literally, his words. Not that he didn't care, but quote, the strong US dollar is a problem for some countries. Yeah, we have a strong economy over here. Very, very So basically what happened is the market initially thought that the lags, remember that comment about the Federal Reserve saying the lags language might be construed as dovish, but it isn't. It's just an acknowledgement of how monetary policy works. So with that, the dollar has done a round trip, and crude is now coming back down again. That's also a tell. And the dollar yen popped back up as well. And we're sitting here on this, again, 3,800 little bounce, very, very bearish engulfing bar on the hourly. We could bounce all the way back up to 38.50. I'm still going to be bearish on a short-term basis. And big picture, I'm still bearish. All right, so volume definitely sold off on the comments of Powell. And then if you kind of take a look here, you asked about Tesla. See, exactly, right? And we bounce. They're gonna monetize those puts, those short duration puts, which means they buy them and the dealer is buying the underlying, bidding that up. What is this? Okay, so we got the US 10-year firmly still above 4. We're gonna have lots of people talking about this. I don't think there's much to talk about. The terminal rate was 5.03. This is important because I think you asked about this, Peggy. No, Mary. Yes. The terminal rate was at 5.03 before the FOMC, then fell to 4.93 on the statement, but now it's up to 5.07. VIX is dead. I know it. All right, I was just going to do this for an hour. I thought he might be done talking by now, honestly. He's talking about insider trading. Kind of interesting that he would talk about insider trading. But basically, Fed members have no ability to game the market with new trading rules. Fed is meeting with many central bankers this weekend. I wonder if that had some influence on the market getting a little bit up here. Well, no, I think this is just monetization of puts. But the point is 380's holding, 3,800. There's definitely weekend risk of more intervention. There always is. What I really think is interesting is how he continues to throw housing underneath the bus. He did this last time. Basically talked about housing needing a reset. His words this time, quote, "The housing market needs to get back into a balance between supply and demand." So he chose his words much better this time. Fed Chair Powell says, "It's a very different situation and doesn't appear present financial stability issues." All right, Brent's at 96. All right, what do we have here? Hey, William, I'm so sorry. I'm focused on any other comments. When he's done, we'll get a much better, clear vision of the direction. So far, we've just had a really sharp reversal of the dovish commentary or interpretation. And important, Powell said the forward curve is the preferred way to look whether inflation is over tightened or not, and it hasn't flattened yet. No reason to pivot, just no pivot. All right, ECB, we got that tomorrow, right? Yep. Okay, William, let me see what you got. Sorry. Hold on. Hold on. Okay, if we over tighten, we can support economic activity strongly. ECB's DECOS sees a higher, I know I'm pronouncing that wrong. DECOS, DECOS sees a higher probability of recession in the euro area. That's just all of a sudden popped up out of my news feed. All right, so it's right now just the reaction. Did not answer a question about the Fed's favorite yield curve measure. By the way, he's still up there. Powell is still speaking, and Biden is about ready to go on and talk about infrastructure, unions, and the like. He's standing by, waiting for Powell. Ah. Well, Powell still. All right, let's see. All right, let's see. Volume did not sell off very hard. VIX is not moving. Oops, sorry, I don't mean to have it here. So sorry. I'm looking at my news feed, and I've got multiple sources, trying to get the most latest and greatest, and then try and interpret it. So that's basically it in a nutshell. Slower hikes, but more of them to a higher terminal rate. Powell is staying hawkish, period. We are now focused on determining the level at which rates must be raised. We don't know what we will do when we get to that level. Oh, geez. And they've never been able to prevent a recession before, so it's kind of moot. But they are definitely calls being bought at the 3,800 spot gamma reporting. So they're not really buying puts into this mess. They're buying calls. Okay. So Apple is still weak sauce, but hasn't busted through that particular low. Netflix, very nice into my 279 first price target. Tesla below 225 on way to 216 again. Oops, sorry. Measured move to 3,800, tagged, calls are getting bought. But really, we're still just, this is it. This is the level, 37.96 above or below. Pausing is not something we're thinking about And we've heard that one before, right? We're not thinking about thinking about. Yeah, this is just, it's enough. All right, I think as far as live commentary, because this guy really needs to stop talking. So we can get to the meat of the move, what the market really wants to do. So there's no pivot. We got that. That's really clear. And now everything coming out is not really so important. Important meaning it's, at some point you'll see rents coming down. That's not market moving as it relates to what we're doing right now. So, and then some clarification around the appropriate restrictive language. Just be careful. Yes, it's exactly what happens. We have these whipsaws, people see what they want to see, and then the market goes right back into its desired trend. What is interesting is I don't see a lot of selling. Yep, and I do see calls getting bought at 3,800. So there's that. He's still talking. Households are still spending, he's saying. Like this is a long press conference. I think this must be one of the longest ones. I'm really thinking this is a solidly long press conference. So I didn't think it would go this long. I thought we'd be done by 3. Sorry to keep you. Well, maybe you don't have to. It's free country. This is actually a free webinar. So all I'm doing is opening it up because it was fun, right? I do this every single Fed day for clients. I also run a live trading room every morning. We have our resident macro advisor, Craig Shapiro, who does a great job interpreting and predicting as well. We basically have, our setups into the Fed day, both on a chase as well as a swing time frame. There are some macro, nuances that I definitely care about, especially as it relates to the dollar yen, suppressed yields, help risk on, and obviously a weaker or sideways dollar helps emerging markets and FX currency. Gold is not in trend. I just always push it up here on the chart because of FOMC day. It always pops up. So we had shorts going in and they are still working. 3,800 or 3,796, I think, is a really key level. We're still, having literally Powell. He just keeps talking. Get off the podium. As rates go higher, it's hard to see a soft landing. Okay, right? The more he talks, the weaker the market gets. And no one knows if there'll be a recession. He's still speaking, so that's why I'm still here. I haven't closed the room. So Nick from the Wall Street Journal is out again. Has the path to a soft landing narrowed? Yes. Is it still possible? Yes. We've also said it was going to be difficult. To the extent rates have to go higher for longer and stay higher for longer, that path has narrowed. I don't see anything here that is particularly supportive of a bull run, right? So I think we've already kind of established that from a macro standpoint. We still have, and just to kind of clarify here, oh, wait a minute, is that Craig? There you are, Craig. Okay, but before I do that, as I've already mentioned, right, big picture, as I wrote yesterday for clients, and I'll just share that if you're kind of popping in. We had a big month of outperformance here in the Dow. And then we had, a right tail or crash up in calls on the buy side because folks were just terrified of missing the pivot rally. It probably will end today. This is definitely, option mania where everyone's chasing short duration calls and puts. But for right now, it was solidly on the call side. We're still a negative gamma, especially in the Qs. NASDAQ underperformance, my number one call from the first of the year, continues. Apple is the last general standing. I talk about all of that stuff. All eyes on the Fed, nothing surprising here. Craig did a great write-up and he's actually pinging me right now. So I'll review his interpretation of this as well. The QA is done. Powell is done speaking. We dropped 100 points in 17 minutes and VIX didn't move. But it's kind of cool to do that real time, isn't it? Okay, so anyway, all eyes on the Fed, sorry. Skew is still extremely depressed with VIX and VIX. I'm not seeing that we're going to get any follow through whatsoever in this Bank of Japan intervention rally because volume right now is coming down. Markets SPY right now is 38.07. Again, remember, line in the sand is that 37.96. What has changed? Nothing. Seasonality. So here we do have potential. Who the heck knows? With ECB tomorrow, it's nothing. Non-farm payrolls, again, I don't think it's much. CPI, okay, that's interesting. But the most interesting will be lame duck if we get a GOP sweep next 8th on the 8th election. So if so, then we do have some flows. We've got seasonality, we've got flows, we've got Santa. So we'll see if that picks up. But the bear case is that, US dollar and yields spike higher with oil. Market structure is still very much, this is a macro market of yields, and we're just pulling forward that rally that basically exposes us to a market that's more violent to the downside reaction. So keep that in mind. It's harder for well-hedged markets to crash, I wrote, but we're no longer well-hedged with IV readings at relative lows and the 3,600 put wall a full 300 points lower. That's from spot gamma. So downside insurance, as I have already been recommending. Anyway, I went live. I gave you your levels. Could we get a Fed-induced rug pull below 3,800? Or are we going to have a technical rally on mechanical CTA buy to cover above 39.50? That's it. It's 150 wide. Place your bets. All righty then. I hope that was, I don't know what, fun, but more importantly, profitable. I really want to just caution you now as Powell is done that we have the dollar moving higher, the dollar yen moving higher. We are right on that 3,800 again. That's sweet for those who are short because it's very powerful candle, but I got to warn you, it's also very strong support. So we have to break and close below 37.90. What did I say? 4? That will be very confirming for me. And that's really all I want to say about that. And gold's done. That was just a, use it or lose it kind of trade. You can find Craig and myself, for anyone who's new here, by the way, just kind of remind you, on Twitter. We're both on Twitter. But I run a live trading room and you can kind of see, right? I do this macro to micro analysis live trading room for clients, a very robust Slack client workspace. Craig can also be found in a channel in Slack for Macro Advisor Bundle. It's a deal. It's an absolute deal this month because we're offering a huge discount. He's actually in charge of our Edge product, which is for institutions. So this is really, we're just kind of trying this out to give to Fishing Club members for a push only upgrade. So definitely check that out. And with that, I want to just see something because he just wrote something and I want to comment on that. So give me a second. He says, I've been posting in my channel. Sorry, needed to listen. His message is pretty hawkish, very far away from stopping. Risk over tightened is not as big as over tightening because we can always cut later. And then he posts, Mary, the the curve, the Fed's that. Sorry. That's how we work together. All right, manufacturing. Okay, I'm just seeing a comment here. Hey, hold on. Manufacturing prices in addition. I have only captured my. Oh, there's someone in manufacturing, to anonymous. Sorry, I'm trying to read your comment. Manufacturing prices in industrials will continue to rise, in my opinion. I would agree. I have only captured 20% of my 35% to market because of my backlog. I think there's a lot of manufacturing working through backlogs with more price coming to market. Thank you. And so far, you know, it's been absorbed, right? The pricing pressures to the consumer. Yes, there's overheated labor market. I work in 4,500 employee private company. We are still raising wages to offset inflation and keep our labor. Absolutely. Oh my goodness. We manufacture in the commercial construction sector. Still strong demand for HVAC goods. Full disclosure, I have a minority stake in a general construction company in the Boston area, and it is hot fire flames. There's been absolutely no slowdown, zero. Hey, Alexander, thank you so much. All right, I won't have the, hold on. Where's my stuff? Give me a second. Right, so you're asking about, okay, so this happens to be on a monthly. I'm getting a question about some currencies. So just keep that in mind first and foremost. This is the dollar Taiwan new dollar, how we're pushing higher with the dollar yuan, okay? But you're asking me about Indian rupee. Ooh, you had to ask me about this one, didn't you? Ooh. Hold on. Okay, let's just kind of come over here. Oh, this is so bullish, which means trouble. How do I get this? Michael, I still really stink at this. How do I make this wider? Anyway, there we go. That looks much higher. This is extremely bullish, as in extremely. Who asked that question? Akshay? Yeah, this looks like it's headed. Hold on. I did this once, but not on this platform. Goodness, this is just this year. I need to go down here. Hold on. I need to mark this up, but this looks extremely bullish. Yep. Probably 92 this year. I gotta spend a little bit more of my technical analysis time on it, but I would say this is heading much higher. What do you want? All right, hold on. Let me get this out of the way. Close. Ooh, look at the dollar take off like a rocket. We're already through it. Wow, these are going to be nice. I have a finance put spread and some Apple shorts. And okay, REITs, let's go over this. I'm just going to let it fall. This is absolutely, there's nothing to even cover yet. 3,800 is for those who are very short duration. We had no support. Call buying was absolutely in play, and it just obviously got cut through. Now we got a reflexive move, which means a standard deviation move will be very likely springing back up, right? But it's clearly very bearish. This is nothing else to say about that. In fact, we could be getting some real trouble here soon, but I don't see it taking off yet. So this is still calm. Let me put cues here. Oh, gorgeous. All right, so we're right back down to the 267. All right, I got distracted. You wanted REITs. So Jason, we have a client who is just absolutely so good at REITs. I can't even tell you. His name is Tim. He's here every day. So that's his whole wheelhouse. Anyway, we're on the next level of support. Michael, please do me a big favor. Do you remember how I put 3,800? Did I put 3781? Please, please, please. Yep, that's the 21-day. That's the fib level on this intraday short. I'd be careful right here. In other words, we can have a little bounce at this level for those who are really short duration. Very, very, very 30. It's a 127 fib level, 3781. Now, when I talk about this 3796 for clients, they know what I mean. We need to close below it. So intraday tag, perfect. I mean, look at this. It's perfection right down to that fib level, 3781. This was already my expectation for Fed. Okay, we've obviously exceeded it. And now getting lower, 3757 or 8. Typically, there's a little bit of a stay of execution, right? Folks start covering, but I'm not on a short duration. I use November and December. So I can't commentate, I can't analyze, I can't engage in clients and also be doing this kind of stuff. So that's just not my thing. I'm covering every asset class on every time frame. So this is perfect for what I want intended, right? As a swing trader. But for those who are chasing, and I have a chase channel, I want them to know that the next level just got taken out at 3781, and we're heading down to 3776 or so 3758. My God, we're just cruising there. That's called the rug pull. All right, so we know what Jay Powell said. So Jason, I'm going to really quickly on REITs. Very quickly. Yeah, I had two clients actually. One, a REITs hedge fund manager, and Tim, his former work at JP Morgan, was very much in REITs. So this is still busted. So we have basically a massive gap down. So in other words, a trend is in a protracted downtrend. Here's the 10-week bounce, 10-week Morningstar reversal, gap down, big bounce in that basically June low, and then July to August, July 15th to August 16th rally, and then a complete rollover with a gap down. Nothing is bullish about this until it can get back above 2473, and then it would only go back up into maybe 27. So it's in a protracted downtrend. So yeah, I don't know what you want to know. This is just not ready. Not even close. Not even close. Oh, that's a very good point, Thomas. You made a good point. So Biden will talk about more stimulus, and market will think more inflation and more Fed hikes. Thank you. That's I didn't think about that. Okay, VIX is busted. I just can't even look at it. It's just useless. So Craig is commenting, I'm just getting into it now. Sorry, I'm working through Q&A. He conceded points to Brainerd, his vice chair of the Fed, and the Doves in the statement, but the presser was hawkish. Higher for longer. Yep, I just tweeted that actually. And risks of under tightening are less than over tightening. So basically they can over tighten and then they can basically talk it back. That's what he said. We have the tools. If we get too aggressive, I would be curious about that. The Fed has never been able to prevent a recession. I mean, we get into one, it's there, we're there. Craig's comment, this was probably as hawkish as he could have been in light of the concession he made in the statement. We are continuing to extend the timeline to providing any liquidity to an economy that is slowing but has full employment and still too high inflation that is increasingly sticky and entrenched. Not even thinking about pausing at that point. Okay, Google. So yeah, we should pause a little bit here. Let me just check a few things. Yeah, there's just, oh. Wow. FX is pretty tame. Yields are tame. Dollar is tame. VIX is tame. That's not, I mean, that's dead. But I mean, huh. 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 We had a lot of, by the way, prints coming in right after, like $18 million put spread, etc. Oil's, I gotta see what my alert is. What? Hold on. I have a little headache here. It's moving too fast. All right, Google. Yes, this is bullish. Sorry, dollar loonie right here. You can see this is my channel support for a sideways move, but big picture, this is very nicely bullish. Pullback was shallow and now it's taking off again. VIX isn't of issue. Qs are doing their thing a little bit faster than I expected. They're right back to 26666. So we're down 2.8% in the Qs. We're only down 0.86% in my volume indicator for clients. That's not very much. I would expect to see, we're only 334 right now. I would expect that to be down about 1.15 by the end of the day. We're going to have some drama in emerging market in Asia tomorrow. That's my bet. But we're just, Qs have already been under distribution, right? Very, very, very solid breakdown. That was the line in the sand, that pink. Absolutely busted and perfectly on time, right? Distribution, big weekly distribution. Came right, tagged, came right back in. On a daily, I know it's really busy, but just work with me. Came right back in. So we need to have follow through, but that's how this works. We definitely need breadth to come back in and Qs to stay under 270. So here's my 270. Pretty much on any time frame, we rallied into the 10-week and then got rejected literally perfectly, 280 to 270, but we overshot it for today. All right, so Google, what's your question about Google? Because two things, time frame matters to me. I have been a big proponent on FANG stocks short since November, December. So this has been posted and written about. I don't know what your time frame is, but this is busted, right? So I need to kind of have a little bit more info. Big bearish engulfing post earnings. Where the heck is my? Oh, 86.31, duh. All right, do you remember, for clients anyway, do you remember I mentioned there was a $23 million put that came in this morning for March for Apple for 135? Yeah, they're already up $3 million. All right, so 86.31 is the next support for Google, coming in fast. Does that help, Darpan? So Zahn, your question about the insurance ETF, I have a hold on, let me get it. All right, so this is my trend list for clients. I'm going to show it to you like really quickly. Okay, this is basically trend list for clients, long only. Stuff that I added new was right here. UNM, insurance, gorgeous move in insurance sector. But if the market obviously pulls back, everything will. But talk about a gorgeous move. And NVIDIA is no, that's the opposite. That is a continued downtrend. Depends on your time frame. But here's the level. 120 was actually a price target that we had short, and then it moved higher into 138. And I said, only if it can get above today, 140.75, but 138 on a weekly, otherwise it softens back into this kind of trend line. And so if you can see, again, you got to let me know time frame, because I've got clients that trade on a short duration time frame, right? That's the hourly. And then this is more of your swing trade. Right, this is like the 3, the 8, and the 21. That's, by the way, a bearish engulfing. So the chances are that it's going to continue for the next day. And then we'll see. And then you can press if it breaks down through this trend line. Does that make sense? So this is more of the swing, and this is the trend. I'm a big semiconductor bear. Big, not a little bit. Big. So you got to let me know time frame. Oh, that's a really tough one, because SPY IV, remember I wrote about this exact thing yesterday, which was basically that, let me show you. I know you're asking a question that's important, but I have to show you. So I literally wrote that yesterday. Hold on. We're getting a little stay of execution at that 21 day. All right. Literally, that's what typically happens. They don't completely crush through. They usually tag, bounce, right? And then break, and then bounce, and then break some more. It's a dance. Okay, hold on. I'm where is it? Oh, here it is. Exactly what I wrote. Hold on. Downside insurance. Look at this. Makes sense that these levels going to into FOMC as any negative reaction could spike IV and drop markets, leading to a rapid repricing of puts. So now you're asking me where to buy a put right now. I need to know your time frame. I'd say December. So, it depends on how closely you're going to manage your risk. Position size, that's so loaded. Oh, Darpin, I'm not good on the 3 to 5 years of what Google's going to do. I think all mega cap tech is going to fall some more. I'm very unconvinced that the market has seen a low. I will show you a chart that will make you go, now I understand why she's so bearish. Hold on. I'm very, very, very big into intermarket analysis. That's absolute, the core of what I do. What does that mean? See this? This is COMPQ to SPX. That's a ratio chart. NASDAQ to SPY on a monthly. Are you with me, Darpin? Okay. So this is 2000. And I started to spy the divergence early in this sold to you market because of my intermarket analysis. Clients know that. But then at the beginning of the year, I said, but I see a head and shoulders. So I came out and said, I think this is going to be, after 13 years of outperformance by NASDAQ, we've already had this sideways, very much so, where energy took off, right? And tech languished. even if it was sideways and then started to fall in this year. But the point is, you could see it happening underneath the surface. This was my bet that NASDAQ was going to underperform, and we still have lower levels to go. So Google, Amazon, especially Apple, have lower levels to go, and then we'll see. But here's the problem. Even if this goes like this, it's going to hit its head, and then it's going to come back down. Or we could just go right through it. But the point is, that's not safe to me. So the very fact that we're coming into an area, which, by the way, has taken the whole year, right? This is November to October. We're not even here yet. I would say wait. %. That's exactly what I see. And I can show you some other charts as well. But I mean, you can already see, I mean, since election day in 2020, basically, I recommended not in November 2021. But the point is, energy has been outperforming tech by a long shot. So we have some work to do for tech to basically stabilize and be safe. That's how it works in my book. So little pause here now that it's come down below the 21. This is the dotted white is the 21 day. So that's a gorgeous short, but it needs to stay below 37.96.41 on a close in order for this to continue lower. This, by the way, was the June low. Can't see it, but it was the June low. And then we tagged it again, cut through it, had 2 days up, and then I made that call that we would completely unwind those gains. We did. We hit a low on the 13th, and a massive short covering ensued. This is the Bank of Japan intervention, and this is FOMC day. It is basically so far following the script of prior FOMC days. The last one was right here. Can you see this one? On the 21st of September, we popped up to rejection at, guess what? 3,900. Been here, done that. Now, this is the key though, how this closes this week. Are we going to get above and move up? Or are we going to stay below and move down? This is really important. And here's exactly what's happening. So we tagged 37.81, 127 fib retracement of that daily move. And now they're going to start to think about covering. Think about whether they want to stay short into non-farm payrolls. Think about whether they want to really stay short into midterm elections, which, by the way, could be bullish, right? Or at least the reaction. So just keep that in mind. All right, seasonality chart for midterm years. I've got that somewhere. Downside post-election to end of year, do you expect it'll be the same, or there might be a Santa rally? Yeah, I've talked about that with clients, that we could still have it, but I've got that technical level. Hey, David. Oh, I love the Dow Jones recent outperformance with respect to intermarket analysis. I talked about that yesterday. Check this out. Like, literally, you're asking questions I already wrote about. All right, so I wrote this for clients yesterday. S&P advanced just under 8% last month, making the strongest October for the index in over a decade. In fact, this was in the 94th percentile. The Dow was the outlier with a stunning 14% return, nearly the best October for the Dow Jones since 1896, before the last 2 days of the month helped it wrap up best month since 1976. From the October 13 lows, we rallied 12% in 12 days. Why so far so fast in the Dow when NASDAQ underimpressed with only a 3.9% return for October? Dow is based on 30 price-weighted stocks, not market cap-weighted stocks, unlike the other indices, right? Which helps, literally, I wrote this, which helps to underscore the underlying strength in the value stocks, read energy and defensive, over growth-oriented ones, read mega cap tech. All right, so I think I've answered all the questions. I think a few of you raised your hands, but I didn't, but then you're gone. I don't know where you went, but I've answered everything I could see in Zoom Q&A. Just a reminder, if you posted anything in Zoom chat, I didn't see it. That is actually where Michael and Rithika and Archana hang out, are my live trading room moderators. And you would have to write to everyone in order for anyone to see it. So that's the problem. So if you wrote in there and it only said to panelists, I wasn't looking because I was in Zoom Q&A. Okay, so apologies, but I can't see those posts. I'm just looking at Michael, big light bulb saying, Sam does not watch this chat. It's too much. Yeah, I only watch one. All right, just want to check if there was anything else. Archana was there. The options was pricing in a 250-point move today. Sweet. I didn't see that, Archana. I did not see that. Options was pricing in a 250-point move. Oh, okay, typo mistake. Thank you very much. I have no idea what it was pricing in. Zero idea. Gold is not ready to move yet, but it's getting very close. Not yet. I get asked that every day for, I don't know, probably a year. What is this service all about? I'm so sorry. I kind of assumed you knew me. So I run a live trading room. I'm a macro to micro analyst. I post my chase, swing, and trend analysis and market timing calls. I have an intermarket focus, which is to compare and contrast different asset classes to find strength and divergences. Basically, I'm big into sector rotation, hence my trend focus has been on energy because energy's been outperforming, energy and defensives. Swings are mostly short right now because we're in a bear market, and chases could be anything. A lot of counter trend, a lot of momentum, a lot of volatility. My job is I time volatility. You just said, what's important about 39.50? 39.50 is where the CTAs come in and buy. So seasonality, flow, and sand. By the way, this is my client workspace. And by the way, I have 8 contributors. Archana, advanced options. Bob is just oil and gas. Gamma flow for those who are into optionality of and volatility that drives a lot of stock movements on a momentum basis. Jordy does just commodities. I mean, literally, he's a full-time commodities trader. Bob only trades oil. So macro advisor Craig is not only a former client, but he's also a hedge fund manager. So he basically took the helm of LaDucTrading Edge, which is a more expensive product because it provides concierge service. He provides a Bloomberg chat. He provides live trade support, lots of custom or bespoke consulting, as well as interpretation of event-driven type of stuff. Anyway, unusual options. Mike's Market Mojo, he's my live trading room coordinator. He also posts after the trading room is closed to the trading room chat so clients can find out what we talked about, even if they're not in the room. Okay, Rithika, she's a Elliott Wave trader, very, very, very focused on momentum trades that using Elliott Wave. Suda does futures. So I have a whole bunch of contributors. And anyway, getting back to that 39.50 level, that is because that is expected to be the range where it activates some CTA flows, according to Goldman. So this was out about 3 weeks ago. It's been updated this week. So I'm basically updating buying, right? So corporate buybacks, there's a bid through end of year, about $5 billion a day. Is that going to move the needle? No, but if we already have a bullish bent, it will. No, right now we're just selling off. So we're at yearly support, 37.66. And as I mentioned, we are getting into this level for clients anyway, you know this, right? 1.15 is going to come in by the end of the day. We're only 10 minutes away, but I wouldn't be surprised if we have a little flush. We're still not in danger zone. I know that sounds really shocking, but we will definitely have weakness into tomorrow, especially after Asia wakes up. And you can see my levels here, right? We've done a really great job, literally 38.38 all the way through to 37.96, 37.49. So that's on a daily. That's not even on an intraday. You can see what's happening to growth plays. By the way, Twitter's still green, which is because it should be taken off the, you know what? I'm going to take that off. It's already gotten bought out. Anyway, you can see the growth plays getting hit. I mentioned Tesla to 216. It's already through 215. Apple mentioned 145. We're already at 145. Really need to close below 144.50 though to have follow through. Helmets on for the close. Microsoft there are 4 solid trend reversals I have been exceedingly comfortable with. The Qs, Microsoft, Google, and NVIDIA. And there's, where's NVIDIA? Anyway, they're still working. All right, so that's quieted. We're still not above that 112. Qs are really kind of sticking that prior Thursday low. Crude is not taking off, which is because they have given a tough talk on rate hikes. If they were to pivot, oh my, you buy oil with both hands, both hands. Okay, there's a phantom print at 374. Huh, pretty large, 374. Hold on, SPY. Are they buying, selling? Let's go look. $374.75. That's just a dark pool. Okay, 37.60 is really important because number one, it is a yearly support, right? But more importantly, I really like this level. And I mentioned this to clients. This was a price target, as you know, 35.88. I wrote about this for September. That was actually my price target for end of September. And we tagged. So that was like so cool. Obviously, we got supported here and we moved higher. I said, if we get above 37.60, we're going to head to 38.70. That's the 21-day. That's just going to be an oversold bounce, a counter trend rally. That's it. We would have to get and stay above 38.70 on a weekly to move higher to 39.94 and then upwards. Obviously, this entire channel has just been completely retraced. Okay, intraday, Mike, can you please update that? We just hit the 1618 and it's literally at 37. We'll call it 68. 37, I know it's already past it, but 37.68, please. So that entire move, that entire intraday move has now been unwound, done. We should have a little reflexive bounce here at this 37. What was the low, by the way? Oh, 37.60, literally. Look at that's quarterly support. Now, if we close here, it's very bearish on the week. So right now, this is on a weekly. If we close here, it's bearish. I wouldn't be surprised if we take out 37.41 this week. But right now, that's it for the day. All right, markets closing. VIX is, Tesla's still 216. Why does that matter? Monthly support. That was my price target short. Still my price target. Apple, 145. It'll be really much more interesting once again get below. Here's at 145, below 144.50. So, all right. So this is good. So far, so good. I think I answered every question and I stayed open right to the end. That's a long one. Jason, I talked about this with clients this morning. You're getting everything, honestly. This has already been set up. Are you a client? No? Okay. This morning, exactly. And clients know this, it's updated every day because I go through this energy play, and so many trends are in the energy bucket, right? For a while, like November 2021, no joke. So this is monthly. It's also, if you look over here, see we pulled back in June, we popped back up, we pulled back and we gapped above, beautiful push higher, we filled that gap. It's really important technically speaking. Okay, that's monthly, but that's also monthly. That's called resistance. So literally yesterday I said this would not surprise me, and I even updated the trend list saying we've had energy outperformance, but it would not surprise me for this to weaken and come back to 85. It's a technical pullback. And then what else did I say this morning? That not only will growth and value sell off together. Yep. So we're basically having that. It's a really nice shallow pullback to 85. I'm not thinking it's going to be this again, but it definitely pull back to at least 85. All right, it's a 4. I'm still waiting for my indicators to stabilize, if truth be told, and they're still selling. And I do make them available for clients, just so you know. It sits behind a paywall, of course, but if you become one, basically here. So I make this available for clients, but it's a paywall thing. All right. So value is relative, right? We know that folks are hiding out in the energy and gas plays. There's no question, you know, it's just, I mean, look at this, right? This is just a reminder, basically, that my trend product works on sector rotation. So that's why it's been very successful. But this is energy. But there's not any reason why you shouldn't defend and protect your longs. So you can sell calls, you can buy puts, you can counter trend trade. Everyone's very personal how they manage risk, position size, their experience with stock options, futures. I got nothing on that. I got too many clients to know how you do what you do. My job is to give you my analysis and warn when it's time to protect. Warn when it's safe to go in, and when I see volatility about ready to emerge. So that is it. No, Discord is not it. Discord is a fabulous community. All of my contributors, except for Craig and myself, are in there. So you get Suda, and you get Pat and Jordy and Archana and Rithika and Mike and Nell, the fabulous live trading room coordinator. But it's all a Discord community of mostly younger, newer to trading folks, and learning. They want a community. They kind of got a more snarky attitude. That's not what I do. I'm very much on the macro to micro. So I want to interpret what the market's, I want to anticipate what the market's going to do. And then I might, you know, use a financed put spread, or, you know, I might have some funky stuff going on that I don't want to have to, you know, spend too much time in educating the Discord folks, because they're too new. Most of the folks in my fishing club service have more sophistication, or they're really interested to know why things move and they don't mind my nerdy intermarket charts, right? So that's why I have a different service. And then Craig is definitely more sophisticated clients that are managing money, and they want bespoke consulting, and they want trade engagement, and they want presence the way that they want it, right? So I'm only available 9 to 11 in the mornings. That's how clients get me. They post their questions and I will comment. I will also identify and review all open positions that relate to trend, swing, chase, if it's, you know, there's market movement. So, and then the rest of the time I'm analyzing and posting in Slack. All right. So I hope this helped today. We had quite an eventful drop. And by the way, I might add that that dropped right into that fib level for clients. Really, really explosive IV puts, right? Which is why I wrote that up yesterday and said, be prepared. We could get a Fed-induced rug pull. And I would say we did. So Europe's going to have a tough time. Asia's going to have a tough time with this. But the big level we still need to break and close below is 37.60 on a weekly. My bet is we very likely take out the low of this candle this week. And the low happens to be 37.41.65. That would make it a bearish engulfing, and it would put us on a downward swing follow through into midterms. All right, Qualcomm, by the way, just missed, and I'm going to sign off because I know everyone's really exhausted, but semiconductors, more meat on the bone short. There's just nothing safe in this sector, unfortunately. So that's going to continue to put pressure on semiconductors. And that's about it. Yeah, so it's a fabulous group in Discord, but you're not going to get a live trading room and you're not going to get me. You're going to get my liaisons are fabulous. Rithika posts and Chase, and all of the moderators are fabulous educators, analysts, and traders. They're handpicked. Nobody's moved. Like we got the same team. It's great, but it's not what I do. My stuff is Fishing Club, and it's not what Craig does. His stuff is Macro Advisor Edge. Okay, hope that clarifies. I wish you all a great evening, great rest of the week. Thanks for popping in. Sorry if I went late, lost your interest, but and Frank, I know you're raising your hand, but I cannot see where the heck you are. If you're asking a question or comment, definitely put it in Zoom Q&A for me, because I don't know what to do with you. In other words, I see your hands raised, but I don't see any comment. All right, and Archana and Michael, thank you so much for tuning in today. I know why Rithika's not here. She's in India, so she's on a vacation, and there's definitely middle of the night for her. Be careful on the rupiah. I think it's in big trouble. Big. Okay, Archana just said also take care. Roku just dropped 15%. Yeah, anybody who's announcing earnings tonight is just, let's admit it. This couldn't be a worse day to have an announcement for EPS. Could not be a worse day. Qualcomm is down 7.5%. Roku is down 15%. And this is just continued downtrend. There's nothing here. Nothing here. It is a protracted downtrend. It is potential M&A, but there's nothing here that's safe to buy yet. And I don't even mean this. This is, 41.85 is coming into view. All right. Have a great evening. Thank you, everyone. Again, big thank you, Archana and Michael. I really appreciate it. Ah, you were short. Good job. Yeah, I had nothing there. Thank you, everyone. Have a wonderful rest of the week. Bye.